all this money creation will come back with a vengeance.
So Roberto, taking a look at the central bank policies, what are the central bank policies that are being introduced and what are the implications that could have on traders?
I think, good morning first, Jessica, nice to be here again. I think that central bank policies have been very active in the last few years and in the last few months, with politics that are more unconventional, unorthodox, and let's put it this way, a little bit untested.
So following on from your previous visit in February, you defined the global economic status as that of the perfect storm. So how would you describe it now?
Yes, I was mainly saying back in February when, everybody was very concerned about a new recession, about slowdown, that we were in a perfect summer storm. So that the situation actually of the economy themselves was not so bad, and that financial market overreacted to some kind of small bad news. And the truth has been that, we came back quite nicely in the stock market. We came back quite nicely in the risk investments, and we have been moving along pretty nicely. I think news from the world economy are pretty good, not as bad as it was expected. But now, of course, we have to prepare for the next event, which, to my forecast, is going to be, it's tsunami. So we are situation tsunami style. So where right now, everything looks very quiet. There are something that we cannot understand because the water went away. So but people still, the one that don't know, are still around, are still on the beach. And instead we should prepare for, the water to come back and to wipe out whatever is too close. So I think it's the time to move away and to be as safe as possible, to be as high as possible, because I think that all this money creation will come back with a vengeance, and whatever we cannot see right now, we will see it later. So there are only two ways not to pay a debt. First is to default and say we cannot pay, like it happened to Greek, or you can inflate the debt. So today they are pushing us to buy bonds at 0%, 0.2%, at 10 years, 20 years, 30 years of governments that are loaded with debt and that they will never pay them back. The situation will be exactly the opposite. So my advice is for people to stay away. And of course, in the short term, if you are a trader, you can keep playing, As far as, it comes around, you can keep playing, but you have to move your assets away from these investments because you don't want to be wiped out when the wave will come back. Of course, timing is important, but as I always say, when the party is almost over, better to dance close to the door. So that's the situation right now for me.
And now, Roberto, taking a look at gold. So gold started this year on a bull market, but how has the global economy shaped the price of the commodity at the moment?
I think that gold was a good surprise because finally we have been for 5 years in a downtrend, in a correction after the big rise until 2011, where we reached 1,900 in dollars and 1,350 in euro. We have been correcting back to 1,100, and from the beginning of the year, people, I think, start to realize that, of course, to be safe in the next big move, gold will be definitely a good asset to be, gold or silver. So I expect, the movement that started at the beginning of the year to carry on for the next few months or years. So I think that is going to be an important asset in any portfolio or in any investment strategy to stick to gold. Here I'm showing the chart in euro. As you can see, we are still in an uptrend since 2006. that have been tested at the end of last year, beginning of this year, and now we are breaking the downtrend from 2013. So my expectation is that the gold in euro will test and break the highs of 1,350, 1,360, and gold in dollar the same. So probably, as I expect dollar to get stronger, it will lag a little bit, but we have an objective around 1,350 and then breaking up and above 1,400 for the next few months. So stick with gold and silver, which is going to probably be a little bit more volatile, but definitely is interesting prices right now for the medium to long-term investors.
So despite the tsunami that you mentioned, gold is still a safe haven?
Absolutely. You know, the tsunami will give a lot of opportunity for people who knows where to put their money. So it's like always, you know, when you have big movements, there are big opportunities. And I think that gold will definitely be a very good investment for, as I say, for the next few months or years.
And you mentioned the dollar strength there, so investor sentiment for the dollar has been fairly positive. So what's your outlook for the dollar in the coming months? Yeah,
let's say that the sentiment of the dollar has been, let's say, fairly positive, as you say, but in the last few months, we had kind of a correction. We had quite a substantial move at the end of last year against all the emerging market currency. We had a big move at the beginning of last year against the euro. We reached 105 from 140, and since then it has been digesting a little bit these big moves and stabilized against the euro in a range between 105 and let's say 115. We had a sharper correction against the yen, but the yen also went from 80 to 125, so now we are back to 107. But I think that the uptrend of the dollar will resume.
Well, Roberto, thank you so much for coming in today and sharing your insights with us.
Okay, thank you for the opportunity to be back, and see you soon.
That's all from myself and Roberto, but if you like this interview, do like and comment on Dukascopy.tv.